Story tonight, a Florida man battling a rare blood cancer says his insurance company is standing between him and the medication he needs. His story exposes a little-known insurance policy that's leaving patients facing thousands of dollars in unexpected prescription costs. Investigative reporter Katie LaGrone looks into the practice, why critics call it unfair, and why Florida patients could be hit especially hard.
I mean, if you just touch him.
Mark Armstrong shows us his bruises that come and go.
This is nothing. This is like 4 days ago. So this looks good.
Call it a byproduct of the blood cancer he's battled for years.
I was diagnosed with essential thrombocythemia 2 decades ago. Now it's what?
Polycythemia vera, which is an MPN, very rare form of blood cancer.
Mark taking his hydroxyurea.
To manage it, Mark takes a daily oral chemotherapy drug. It's taken a toll.
It's just gotten to the point where it's gotten very toxic and the side effects have gotten very bad.
Like what?
Headaches, major headaches, fatigue, skin ulcers. It's enlarged my spleen. I've had what they call splenic attacks.
Recently, his doctor put him on Jakafi, a new but pricey treatment.
By the end of the month, I was feeling great. I didn't have the swelling in my legs. Still had some minor headaches, but it was bearable. My skin started looking better.
So this was a dramatic difference.
Oh, it was yes. Even my hematologist, when I told him, he was amazed.
But Mark can't keep using it because of a little-known insurance policy called a co-pay accumulator.
Here's how it works. Drug companies often help patients pay for expensive medications, but that help doesn't count towards a patient's deductible. So when the money runs out, a patient could be left owing thousands of dollars in out-of-pocket costs before their insurance kicks in.
In Mark's case, the drug maker paid nearly $9 grand for his first prescription. When he tried to refill it, his insurer, Oscar, said he still owed his near $8,000 deductible.
You accepted $8,600 from a manufacturer, and then you tell me I still owe you $7,700? I don't understand it.
If I'd gotten the money from my mother or some other family member, we'd have been fine. But because it came from the manufacturer of the drug,
they won't accept it. It's just crazy.
Co-pay accumulators are so controversial, more than 24 states have already banned them. Florida is not one of them. Despite several attempts, pharmacy benefit managers and insurance companies argue a ban could drive up patient costs.
I don't think it's a good public policy.
Dr. Jay Wolfson is a health policy expert at USF.
They are getting the money. They're being paid by the drug manufacturers. And they're saying, well, we're getting the copay, which would normally be applied to deductible, but we don't want to do that. So we won't. And we don't have to, because the law doesn't say we have to.
So it's a double dip.
It's kind of a double dip. It's also a fundamental fairness issue.
Even more frustrating for Mark, a federal rule is supposed to protect patients when there's no generic equivalent. But a lack of federal guidance and enforcement means insurers are simply ignoring it.
it almost feels like fraud. It just really does.
Because of a hidden insurance policy most patients don't know about until they're desperate and denied.
It's just horrible to watch him go through this. It's not fair. I don't know how these people, the CEOs and CFOs and COOs of this insurance company, sleep at night.
After we contacted Mark's insurance company, he got his new meds, but how, why, and who's paying for it isn't clear. His insurer, Oscar, telling us the member has now been taken care of. Adding the use of the copay accumulator in his case is consistent with Florida and federal law. The big takeaway for the rest of us: know if this policy is in your plan by reading the fine print. And if you don't like it, contact your lawmaker. I'm Katie LaGrone reporting.